Hi all, welcome to Invest with RJS. This video is about rules or you can say factors to be successful in stock market. In the previous video we have seen how we can enter into stock market and how to get rid of the fear of the stock market. Now in this video we will talk about strict rules or the factors which we have to follow in order to be successful in the stock market for the longer run. So the main first point to be noted is protect your capital. So main thing for us to come to stock market is to make money, that is correct, but along with that we have also need to protect our capital. So treat your investment or a trade as a business. Like investment can be taken care in the second part, but if you are doing a trading or if you are coming to the stock market as a trader, even if it is for the swing trading or anything, treat this trading as a business only. So how these 2 points will combine? First thing is protect your capital. Consider an example of having a 1 lakh rupees. So you need to do only 10,000 rupees of your investment, so that you will have a confidence of other 90,000 which is pending in your account. So considering it as a business, it is like, just take an example of a FD in a bank where they are only providing 6% for entire year, 365 days, considering a nationalized bank. So you are coming to the stock market and you are expecting to have a, like from 10,000 rupees you are expecting about 20,000 rupees, 30,000 rupees, and that too in a very short span of time. So ideally we should treat our this stock market as a business, so that with every trade you do for like short term or a medium term, just take out around 2%, 3%. Try to first beat your FD, that is more than 6%. So when you do this way, you will be able to make more money in the future. And 12%, if you are able to achieve first 6%, that is also fine. If you are able to reach 10%, that is also fine. Eventually you will reach around 10, 12, 15%. So once you become expert, you will be knowing where to get exit, all those things. So treat this as a business and learn as a student. The reason is stock market is very deep, and how stock performs is also very tricky situation. You need to understand how stock works, what is the impact of result on a stock, and how our capital get affected when the stock goes for a loss. Those all things we need to learn first. So, and as the other thing is, risk only what you can afford to lose. That is why I said in the beginning, if you have 1 lakh rupees, we are only investing 10,000. The reason, because if you are doing a trading, or if you are investing in such a small company where you are not sure about what can happen in the future, you are unable to get the fundamentals of a stock, but it is a good stock that you studied, but it is a new stock where we do not have any entry data there. And in many of the trades, if you take, you need to risk only those you can afford. So that is the only reason. Take a very small amount of your investment and start doing from that. Stop loss order method, in the sense, what it will help us. Many people you might have seen saying that there is no stop loss. The reason, because it will hit the stop loss and go back. That people are saying for the day trading, but I am suggesting to not to do a day trading. This is mainly for the positionals or the swings or the investment as well. Like consider that you have invested in such a stock for around 1 year. Consider that now you are investing in some stock, and that is for 1 year. You have invested 50,000 rupees. you need to have some amount in mind as a stop loss, that is within 25,000. Like if it comes lesser than 25,000, you will be coming out of it. Why we are doing that? Did we not tried, like studied the company before it? Yes, you have studied, but the situation in the market comes in such a way that even the results or the market or the global market will make your stock go for a loss. If you are so confident and if you have a money which is you are risked only to afford to lose, then be there with that. Otherwise, come out of it for now. Only when the stock looks stronger, then you come back and make a position into it. Because otherwise, there are, in our experience, we have seen many stocks which comes to the loss because of some other reasons. Government policy changes, it takes very much higher time to come back to the same price. That is the only reason. So fear of missing out, this is the main thing you have to understand, that stocks which go for a big rally, then it will come under all news as saying that now this stock has reached 40%, 50% in less amount of time. It is a, so because of which all the retailer will be trapped in this. Do not go for fear of missing out. Stocks will come back to its real value. That's the face value of it. So even if it raises for 30-40% because of some news or the sector in which it is growing, it will come back to your price. Wait for retracement, then wait for entry. Do not go like missing out in any of the stocks. Stocks will give their opportunity for you people. And traders should know when not take any trades. This is the main thing. So whenever you take more trades, you tend to get more stress. That is the reason, take very less trade, and that should be a very good studied trade. So trade not taking is also a good trade. The reason, because you are not investing anything, or not taking any trade is also good trade. The reason, because capital is actually saved in that. So because of which, see, right now you don't understand personal life things, because if your money gets into the market, your psychology changes, emotion changes, because of which your personal life also get affected. That is the reason, only those money should be invested which you can sleep without any problem. Even that goes. That is the way we have to do the investment. We are doing an investment, so should be done with a very calm way. So whenever you go for a loss, study for longer terms, what happened, why, what reasons. So you have to do a note of it. What was the reason? Everything. Is that from the external factors your stock got a loss, or is that from the internal thing that you have not studied well? So always keep for a long term goal. So we are not suggesting anything go for day trade, no F&O. You are doing at least a minimum of 1 month, 2 month, 3 months positionals or the long term investment here. So that's why it's just a company's name we are putting, not for recommendation. Nifty 50, just try to read how the company runs and how they are providing profits in a cyclic way. Cyclic way means, in some of the places, some of the quarters it will give good results, some of the quarters it will give bad results. So these results mainly work on a cyclic way, so that we have to learn. So these are the key factors we have to follow. Mandatory strict way we have to follow. If you lose this one, if you are not following this, then we will be in danger. So please do follow this. So, and this is from our Invest with RJS article. You can come to invest with RJS and try for key factors. You will be able to see this. Go through 2 and 3 times, so you will be able to get the idea about key factors. Thank you.